What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for March 15th, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So today was the day of the core. Now we did come in line 6.6 to 6 or 6.0 to 6.0 is what we hit. There's still a lot of inflation in specific, a lot of the ones that have been talked about multiple times. Rent is still high. A lot of food is still very high. It's going to take a while for that stuff to start to turn over before we see a big significant change in those particular things. But being said, uh, right after close today, Wells Fargo essentially just announced that they are filing 9.5 billion mixed shelf offerings. So essentially, they're selling a lot of stuff to make 9.5 billion. And this is obviously trying to essentially a lot of these this gap essentially that we've seen from SVB in their debt and debt to assets is ultimately what sank them, and understanding that they uh, weren't accountable. And it was really interesting because I was looking at something today, and essentially which that was stating that what is happening is with SVB is that their particular assets that they had, they didn't have to really disclose that stuff. It's a rule that's been changed in policy before, so they didn't really have to disclose the amount of debt that they had compared to assets and the gap that they had there. And so, nonetheless, when that was discovered, that they realized that they were well underwater with a lot of these things, and so that's why it really wasn't publicly known. But nonetheless, I'm sure a lot of people out there have already looked into SVB. The question is where is it going to take us now? Before I get into that, I want to disclose my thesis was based on something breaking. Something has broken. SVB broke because of the rates. My next question is going to be, I've essentially almost scrapped the inflation and what's currently going on with that because of the way that core came in line today. My next pivot point is going to be, okay, well, how much are we going to break? And that's what's going to take a couple days going into monetary policy to see if anything else breaks. We got about 2 more weeks of this month, um, which I think some real nasty stuff can continue to happen. But if it doesn't happen, my next thing would be that maybe we are actually going to pivot. Again, there's no way of knowing. I still need to see other things unfold. I need to make sure that the banks can hold because of the fact that what's going on. But with the fast, rapid movement essentially of the Fed, the Treasury, and FDIC, right, and getting a backstop put in, and then you also have not only them doing that, but then you have it seems like a lot of these other banks are working on the side to try to create more liquidity to essentially fill that gap that they have with essentially their assets and debt owed. If there is a bank run, that's going to be an issue, and that's what my concern is that yes, I've hit one pivot. I've hit one of my check marks on believing that there's going to be a pivot soon, very soon. And this is something I've talked about. I believe it would happen very soon, but I'm waiting for that other foot to drop. But my first check mark is checked. We are breaking, right? SVB is broken, failed bank. Question is what kind of chain event is that going to cause? Right now, you get a lot of banks trying to liquidate assets to make sure that they have enough capital in case there is another bank run, because we have to also understand that it is very much in the Fed's hands what's going to happen next. I mean, it's been that way since, but we've been very data dependent. At this point, um, we have been very data dependent. And at this point, I think we could actually potentially see inflation start to come down. It is coming down. I think we'll still hit some sticky spots potentially on the way down. I think our window, right, our window compared to last year was till June as far as inflation goes. Again, you're continuing to see lots of layoffs. You're continuing to see a lot of different things that are currently occurring. There's debt accumulation. People are starting to spend less. So you're starting to see this impact of a lot of different things. Now the question is um, does the Fed raise at least to 25, given banks are already breaking? Is the question. Do they risk it and put another 25-point basis move on for things to break? Strong possibility for essentially doing a 25-point basis move just because to save face. Who knows? Again, we have to see next week. But the thing is again, I want to emphasize that we have hit my first check mark, and that was that something is breaking. Again, now we have to see how far of extent the banks break, right? Because if we get another bank run, you're going to cause more panic again. People are going to liquidate, and banks are going to fail, and then you might get another huge downside into everything that's currently going on. So, I am optimistic that we may actually have a real pivot coming very, very soon, a lot sooner than I anticipated, because of what I've seen over the last few days. Um, Again, the inflation is continuing to come down. Again, something has broken. Now, my next thing is give it another week. We'll see what the Fed do from that point. Again, at this point, data and everything, in my opinion, doesn't matter anymore. In my opinion, the non-farms are ridiculous. I'll straight up say that a lot of these reports are ridiculous to save face, to not drive panic, because of the fact that you do have the non-farms essentially dive deeper into the non-farms and understand that a lot of people that are unemployed are considered or unemployment are essentially would be considered employed. Where we got people working multiple jobs, so it looks like there's more employment. And so with all that being said, and then you got a lot of the travel leisure group, there's a lot of seasonal workers coming in, so you're getting a lot of inflated numbers, but a lot of it is part-time work. It is not full-time. Full-time work since last year has come, it's still way down from what it was last year. Full-time workers. So a lot of people are working multiple part-time jobs just to keep up with inflation. So inflation is still high, and that is something we have to recognize, but it is coming down. And so I'm starting to think that this may be the final thing. Now that we got banks breaking, or a bank that's broken, potentially Signature Bank, I believe, has also been closed out. And then you got a couple other banks that are making moves or potentially losing a lot of money because people are pulling their money out. So I wouldn't be surprised if we wake up and another bank goes under because everybody has moved their money to JP Morgan. Is a strong possibility, and is putting a lot of these other banks even under more pressure that they can't cover essentially the debt that is owed. And so I see more banks going under over the next maybe week or two. Now, if we can go 2 weeks and that not happen, then that would be fantastic, but it's not going to happen, right? And so now we're seeing the effects of the rates being increased at a rapid pace. Essentially, again, that the banks can't cover their debts. And so that's how SVB went under. Now you're getting ready to see some more upcoming of that. Again, people moving their money. Again, the banks need that money if they want to be able to survive these rate increases. And so it leads me to believe that Powell may drop his guard and may only come in at 25. I still think he could strongly, possibly not even raise rates. So this phase two that I thought was going to get pushed out because you had a high PPI, you do have a PPI tomorrow for inflation report. But again, I think there is a lag in some of those different things. And so my next phase, so I talk about how rates have phases, right? You have the first phase, and essentially when they start decreasing rates, and then you get the second phase, essentially where they just hold rates for a prolonged period of time until make sure inflation is down, and then they start actually decreasing rates. But right now, what we got, and something I wasn't expecting so soon, was that banks are already breaking. We needed a big event to start pulling off rates. I'm very curious to see if banks fold and we get multiple banks fold, which could essentially lead to a big downturn, that would be the trend that would flip everything back up. And I would be very bullish at that point. Right now, I need to see more. I don't have enough evidence to believe that we're going to uptick and start running just yet. It could happen. You have to believe it could happen. I know there's a lot of people that are bearish. I was extremely bearish at one point, but now that I had that first check mark, I'm close to believing that a true pivot is coming. Now that that stuff is breaking, and I've gotten more digestion that okay, well, there's a lot of these banks are starting to fall. But the thing is, and something I mentioned yesterday, is that this isn't going to be a slow grind down. This will be a crash, right? And a crash can be anything, right? It could be 100, 200 points in a matter of a couple of days. We've seen a lot of those different things multiple times already. And so, especially when, things don't come in line last year. So do I see us having a limit down? Probably not. We've suffered a lot last year. I talked about the 3,500 mark around November, August last year. That could have been potentially the bottom, but only time would tell, right? How things would play out. There was no way of knowing how things would play out. This is why I do daily updates and weekly updates, because it just really depends on how the event plays out. And right now, my first check mark is checked. Now I have to give it time. I have to see what the Feds say to determine if I'm going to buy into what's actually occurring right now, that we are good. I think that there is a lot of backstops being put in place, but I think it is protecting a lot of the top 10 banks. Any banks outside of the top 10, I think, have a really good chance of essentially going under. And I think that could be the event that drops the other foot and could be the crushing blow into which would essentially give me my second check mark to believe that we're actually going to pivot. Whether that's if the Fed does or not, at my point, that would be the crushing blow. That would be the pivot that I would buy into heavily and ride this thing up. But right now, I guess you could say I have two check marks. One being I needed to see something break. We've seen that. Now the next thing being, okay, how big is this break going to be, and trying to gauge how big this break is going to be. And this is why I do day to day and watch stock markets day to day and watch the events that are going on, because I have to see to make sure this thing is over, right? And I think, again, my thesis being is that more of these smaller banks are going to go under. You're going to get more people pulling out their money and going to your top 5 banks, top 10 banks. And that's going to be the driver that's going to drive everything down from that point. You have to understand that there's a lot of people pulling their money out and a lot of people being delinquent on different payments, whether that's their automobile or whether that is with the mortgages, whatever the case is, or whatever other debts they're carrying over month to month. You have to understand that is about ready to hit, and you're going to get more. And I do believe a lot of these, we're going to lose a lot of banks, and that's going to be the event that's going to drop the foot, this last foot that I'm talking about. So And that would be my final check mark to believe that we are pivoting. At that point, I wouldn't care what the Fed's doing. At that point, I wouldn't care essentially what the data says anymore at that point, because at this point, I'm not really watching the data anymore. I talked about this yesterday. I'm not watching the data anymore. I am watching what is going on with the banks. I want the banks to seize and break, lose a couple of smaller branches, get more bank runs so people shift all their money into these bigger branches. We roll over, last rollover, and that would be it. And that would normalize a lot of stuff at that point. But we have to wait for that to happen, right? I can't just assume that that's going to happen now. I don't think it's just going to happen now. You need more than just one bank. One bank really isn't going to do it. It's not enough, right? And so, again, we wait and we see. We give it some time, and you have to. This is why you have to be patient, because you got to wait and see what happens with the banks. But my next thing I am watching is no longer the core. It's no longer all these inflation things. Again, it depends on what the Fed does, right? If the Fed lays on one more 25-point basis move, I can guarantee you we'll speed this up a lot quicker, and you'll get a lot more banks breaking. And then at that point, I'd be like, okay, well, that's it. That was your enough fun. That might be the nail in the coffin. This is March Madness, and that might be it. Was you get Powell pushing it another 25-point basis move, everything just breaks. And then all your top 10, I'm going to say it's going to be more in the top 5 because people are scared. So people are going to essentially pull all the money in the top 5 banks, and that's it. And then you're going to lose a bunch of banks, and that's going to be the event that just sinks the market, period. And then you buy that bottom. Not financial advice, but that is my thesis moving forward. And again, it takes a big event like SVB that I was looking for. Again, the first step into leading us to where we want to go. Let's get some more bank runs, right? Let's get some more banks to break. And at the end of that, you'll recover, right? That's what I'm thinking. And then obviously the stock market will start pushing up, I think, in my opinion, at that point, compared to what you're going to see in reality, right? There's still going to be a slower recovery. But you have to think, too, is that I actually think we're in a depression. If you really want to go back and look at it, you have negative GDP for the 2 quarters, right? And so, being said, potentially even longer than that, I think we are in a depression nonetheless. And so with that being said, we'll realize that once all this passes, that we were actually in depression. And I think you have to hit rock bottom for us to turn. And that rock bottom is knocking on the doorstep. Again, we have our first check mark, my first check mark. We are knocking on that door, and I am ready to pivot very, very soon. I can feel it. It's just my intuition. But again, I wanted to emphasize that because this is something I talk about all the time, is that it's going to change, right? Like, you have to understand at some point this is going to change. You have to change your thesis and be ready to change it at any point. And right now, I saw that first thing. It took me a little while to digest. Okay, is this really the event that I'm looking for? It is. Let's let this play out. Give it a little bit. I don't think it's going to take much more patience before you get a full break of everything. And like I said, if you get a bunch of banks, you're going to be stress testing real life banks when everybody pulls their money out, throws them in the top 5 banks. You're going to your bank runs to all the banks. Everything's going to be pulled out. We're going to test that backstop, and then after that backstop is tested, we'll find our bottom. So with that, we'll go ahead and look at this. I think I ranted enough. I think 20 minutes is enough, so I do apologize for that. But again, we are in a time where I think there's a lot going on that we need to pay attention to. So SPX, let's actually look in the daily here. So you sold off heavy. Let's see. So our bottom, if you want to look at this, right back here, this is something I always highlight, is this candlestick right here. This is what people saying could have been the potential bottom. And I remember that day exactly because it was right after Powell. I think it was right after Powell had announced something, and we sold off. We gapped down I think it was right after a core, and we gapped down like 80 points, and then that thing exploded 200 points in the same day, and then we've been just kind of up ever since. So that could have been the bottom, the 3,400. I really think we have to see what this thing does hit, but really watching that closely going into this next move. Again, we have to realize too that we are almost into we got options expiration this week, so you get added sell pressure, and then you also get right around the essentially right around the corner from the next earnings cycle as well. So you have to keep that in mind. Although I do think this one's going to be really bad. We'll see what happens, right? I think again we see banks break. I think you're going to see some companies have some really bad earnings. Again, a lot of this stuff is starting to get it's not horribly bad, right? Like the market is numb to these things, and so with that being said, I don't really know how much weight none of this stuff is. I was looking for a catalyst during this time to see where I could see it. It wasn't playing out, and some of the that were some places I thought could have been obvious. But again, banks give up first. That's a good sign. We know what our catalyst is now that's going to drive down the markets. We just have to wait and see how many more banks again disclose that they failed. And then from that point, our backstop will be tested, potentially even break. They have to come up with some other solution that will cause the cascade event to sell us off. To prepare for a real true pivot that should have happened. The people were thinking was going to happen in the beginning of the year. I think you get your true pivot at the point. So with that being said, we'll see what happens there. But tomorrow, got PPI again. The data it might run push this thing up a little bit, but again, I'm not really concerned about that, and we're just worried about the banks at this point because the banks, if you get a bunch more bank failures, Powell might actually start taking off rates and realize that, oh, maybe we did try to tighten way too much at that point. I mean, there's no way of knowing, right, until you actually see it occur, and we saw that occur with SVB. So, so tomorrow, again, at this point, I think we're going to more than likely we might push up a little bit more. I wouldn't be surprised if we try to retest the 4K mark, or even potentially just kind of hover around this area until we get news. I mean, I think at this point, what we're waiting for is just any news to drop about a bank going bad, and that could be it. And we wake up when we're down, 80 points on the SPX, and so at this point, I'm kind of thinking we're going to do more. We could push up more. Again, the news today with core coming in line, and then again, the bank's backstop, it is brighter news. Again, the banks have broken. We lost, or essentially, this will be the big bank, right? Like back in 2008, it was, I don't remember what bank it was, but you had that one big bank that essentially was the pivot point that everything else followed. This is the pivot point that everything else is going to follow. You got SVB, and then you're going to have a couple other smaller branches. They're going to lose it, and then you get that cascading effect, the downside, and then that would be true bottom. But again, this part here, I can give ranges, but to be honest, like I said, if we get that piece of information overnight, it's not going to matter, and that's what we're waiting for, is the next bank to break. That's pretty much what I'm watching right now. So the consumer getting squeezed, all that stuff I talked about before. At this point, in my opinion, let's watch the next bank to break, and that will be it. And then that will cause enough fear to liquidate more money out of these smaller banks and putting into the larger banks. And essentially that would collapse a lot of these smaller banks and then potentially drop the market. So we see. But right now, the market range right now, it's currently try to break out the 39, roughly around the 39.43. So again, we've been playing about 50-point ranges here. Again, I think the market's just really trying to digest what's going on with the bank stuff and see what happens. Again, a lot of banks are trying to soften that backstop for themselves in case something does happen. So you're seeing that with Wells Fargo. But we'll wait and we'll see. So right now, again, either way, but it's holding that right now. You got a strong support here at the 37, 90, uh, essentially the 3800. It's kind of what you're holding. So if it does break that, again, you get a pretty big dive down to 3600 if that happens. So if you get that next bank run, that could be the one that breaks us through that. Again, you hit a big support. Of course, you're going to get a bounce. We'll see if we turn over and we start selling. We get extra sell pressure. Again, these red dashes here are options expiration. Get some extra sell pressure to the downside. May break us straight through the support. And again, if we do that, that's going to come down pretty quick. Again, there's a lot priced into SPX, so you have to understand that people aren't going to make any profits off of SPX if those puts. That's for sure. So watching that Bitcoin, this is funny. It started ripping up and then wick straight right back down. Again, banks turnover. At this point, I don't think anything is safe, right? I do believe crypto will lead the way. Crypto AI will lead the way out of this thing. It's just being a little bit more patient, and I think we're really, really close. I keep emphasizing that because I think we're very, very close. It's just not quite yet. So again, I think this is going to make another downturn. Again, if the bank runs and everything play out, again, this is like this whole bank scenario is a different scenario. We've transitioned to a different scenario, a different mindset. We're on our edge, ready to attack. For me, at this point, because I know all we need is that final big move, and then that's the one. That's the one I'm looking for. So Bitcoin, we'll see what happens there. I do believe it's going to head right back down to the 19K mark. I think it's going to go lower. It really just depends on that. We're waiting for that bank to break and go for there. Again, heavily dependent on what happens next week as well is going to really determine that. The dollar, again, still holding roughly the 103. They're still not out of the woods with this one. It could start ripping up at any moment. And you can go off of technicals. It really doesn't matter. This is why I go off of supply and demand, because at least it stops at supply and demand zones. Or if you're going off of technicals, if an event happens, it's going to blow straight through those. And a lot of times when I look at events, for say the dollar is going to rip up, I typically look up the next zone. I don't even watch this zone because I feel like this is going to blow straight through this. Especially what's going on lately, because events now carry a lot more weight than what they normally do. So typically an event will blow straight through there into the next zone. So that's kind of what I'm watching there. Same for here to the downside. If something bad happens, or in this case, it would be something good happens, that this thing will blow straight through past this 100 mark into that next zone. So watching that there. Tesla could be a higher low. It's really hard to determine. You want to look at some of these other time frames. I mean, we essentially broke. We retested. This was the retest of this essentially resistance. First retest you got. You're going to get a small pullback and then potentially a big rollover. Could Tesla roll up to 200? I don't know. It depends on how this bank scenario plays out. But again, I think it could be accelerated if Powell comes in at 25-point basis move. I think you could, if it goes 25, I think this thing will just break and roll over from that point. If not, could get a push back up and try to revisit the 205 one last time before rolling over. It's typically what happens on this particular move. After you break, you retest, and then you get your dive. May see Tesla lower, under 100. It really just depends. But again, in my opinion, you need a lot of these banks. If you get a cascading effect of banks, it's going to lead to fear, and that could potentially roll us over. But again, I'm very much on my seat, ready to pounce on what was about ready to happen. And I don't know if it's going to take tomorrow or if it's going to take 2 months from now. But again, we are in that window of inflation that peaked last year in June. And so I'm thinking this could potentially happen. So we'll see what happens there. NVIDIA, again, still very high. I don't like the fact this thing is just ripped up. Still 50%. I think this thing is going to at least come back down to 175. But again, we'll see at that point. That might be the the last dip we get before this thing transitions. But we'll see. We'll have to wait and we see from that point. BA, again, just continuing to consolidate. It needs to come down to at least 166. Again, you want these things at least come back somewhat before even potentially even thinking about a pivot, but we'll see there. JP Morgan, again, this is one of the ones that hasn't even retraced 50% yet. Again, I still think this is going to break and start selling pretty heavy, at least down to the 120. And again, depending on what happens with the banks the next couple days, weeks, months, it could lead to a huge cascading effect. So again, really depending on what happens with the Fed. If the Fed go to phase 2, you may get a pivot. I just think that's too easy of a transition, in my opinion. But we have our break. We have one of the check marks. So you have to kind of be based on that and ready to pounce. Risk management is very key in times like this. But like I said, I have my 2 checks. First one is checked. I'm just waiting for the second one. Again, we have potentially enough to start going, and that's the thing you have to be prepared for, is we could potentially just start kicking the can and this thing doesn't occur until next year and we start pushing up. You never know. These are the things that play out, right? You can't, it's hard to time things like this for to occur, but you also don't want to not be in the market if it does want to flip. So at this point, again, slowly start DCAing in positions again on this pullback. If it really crashes, then I'll be going a lot heavier, obviously. But again, not financial advice, but we'll see what happens in this next go around. But again, I don't want to make this video too long. This video is already pretty long, sitting at about 33 minutes. So I'll cut it here. Again, there's just been a lot of information out there, so I don't want to make these short. Again, my thesis is changing, so I have to kind of, in my opinion, I talk it out here, right? This is why this channel was created, to not only educate, but to essentially have a brain dump at the end of each day on what I'm thinking throughout the day and what my next move is. And that's what I do with these. I record what my next move I believe is going to be, and then we go from there. So again, that's what I'm thinking. If you like this, remember to drop a thumbs up. If you want to comment, leave your thoughts, ideas, opinions about where I'm currently sitting and where we could potentially be going. So with that all being said, have a good one, and I'll see you guys on the next one.